Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Greetings everybody. Right now, as usual, we will take a look at the gold market. Well, in this video, guys, I will not talk a lot about the recent Fed statement. So if you would like to hear my comments, please watch today's daily video on the forex markets on the euro currency. In the beginning, I have talked a lot about the Fed policy and what really market have heard on the comments. In the two words, the Fed just confirmed what market already knew. So the one rate increase in December and careful policy in 2017 and 2018. So it means that probably we could expect the two rate hike in 2017. So this will be not really very aggressive policy, and I probably will not treat the overall comments as the dovish. They're not really dovish, but they mostly stands in agreement with the facts that market already know. But they maybe not as hawkish, as aggressive as market expected to hear. But here we could understand why Fed have done this, because there already was in a not really in a bit tricky situation when they have promised in the beginning of 2016 aggressive policy, but they will have to review this policy later and step back in the numbers of the rate increase. So as a result, we've got only one rate increase in the current year, although in the beginning of the year Fed have spoken about the four rate hike in each quarter. So to avoid to escape such sort of the situation in the future, they have made the careful comments and just they leaves the door open for possible revision of the policy. That's normal. So what we could get as a result of this Fed statement, probably as the chances of the rate hiking and the expectation of the investors on the rate increase in December stands approximately the 50% or never greater by the Fed Fund futures rate, it means that most part of this rate hike already is priced in. And since the next meeting will be only in November, where Fed probably will take in focus already the policy in 2017, gold could stuck inside of this consolidation that we already have, or even take an attempt of the upward breakout. So it seems, based on recent comments, that we probably should forget about immediate breakout to the downside of the 13 even area and turn to the second scenario, where the market will try to create some maybe new top on the gold market, or at least to show some upward action. From the technical point of view, we have some bullish signs for that. First of all, take a look that market has moved above the monthly pivot point, upward bounce, very nice, and again it has started from the daily confluence support. Okay, trend has shifted bullish on the daily chart. Also, guys, what's more important is that behavior inside of this consolidation that in fact takes the shape of some kind of the flag pattern or pennant on the weekly chart, and this pattern is bullish because it has formed after the rally. And take a look what has happened. Market has turned up before it has tested the lower border. So it hasn't reached the lower border and turned up. This is bullish sign. And very often this leads later to upward breakout of this pattern. This very often you can see in the triangles. Every time when we see that, we attract your attention to this moment. The upward breakout here could take the shape of the minor butterfly. The situation, guys, is very similar to what we have on the euro currency. It's a bit different in the shape, of this consolidation on the euro currency. This is head and shoulders pattern. Here is the flag, but the idea is the same. So for example, market could form some kind of the butterfly, maybe not the 116, but just let's add minor extension and see what the target could be based on this pattern. On this pattern you can see this stands precisely at the top, 1370, the previous top. Maybe market will show some wash and rinse of this top. This could happen, but currently you can see this butterfly could be formed here, and we just need to see what really how the situation will develop. So currently definitely no shorts should be taken on the market, and here you could see why we have warned you to not anticipate the breakout, to not anticipate the Fed decision, because no necessity to do that. If the breakout will happen below the 13 even the downward plunge could be significant, and it's no necessity to take the position right at the support. That's why we have called you to not do this, because Fed it's not a good idea trying to predict the Fed comment. So as you can see, rally has happened here. On the 4-hour time frame chart, what do we have? Our reversal pattern has been completed perfectly. Even greater result has been achieved. So you can see market has reached right now 1330 for resistance. Now guys, as on the euro currency, we need to see the durability of the current action. So whether this action will be really short-term trend, so will it be the changing in the short-term sentiment, that's probably could happen, or it's just an emotional reaction on the Fed statement, and that Fed a bit mismatched the hawkish expectation of the market. Technically guys, it seems that it's not just a minor reaction, because here you can see the market has moved above the weekly pivot resistance one. It's above the 1325 area, and that usually indicates the existing of the new short-term trend. On the daily chart, as I said, the most important sign right here is the market has turned up before it has reached this lower border of this consolidation. It's really bullish sign, but we will see. So if we will get to some acceptable scenario or acceptable situation for taking the long position, maybe we will do this with the expectation of reaching the previous top and the wash and rinse of the previous top. This is very typical for the gold market. So grabbing the stops above the top, punish the traders, and then turn to the opposite direction. This is absolutely normal. That's why some time ago we have mentioned this scenario. It's mostly stands in a row with the gold's habits. So right now, let's see what will happen just next day after the Fed. Maybe a couple of sessions we will need to see what is going on, and if situation will be confirmed, the market indeed will continue to move higher. Well, in this case, we will think about taking the long position, the short-term long position, with achieving of the returning back to the 1370, 1380 area maybe. And after that, when this target will be complete, and if market will complete this, we will see what we would get after that.